Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 16th. We got a bunch of impact news today, so we'll jump right into it. We'll start out with the weekly jobless claims. Last week, we had 328,000 people applying for unemployment. The forecast was supposed to be in that same range, 330, and it came in at 326, so slightly under, but still within the same range where the forecasts lie. We have a consumer price index. This is the inflationary numbers that we look at on the consumer side of things. So this is a high impact number here. So back in November we had 0% for consumer price index, 0% inflation, and the forecast was supposed to jump up to zero point 0.3, and it came in at forecast. Now, when you strip out the food and energy, which creates the volatility, uh, we have the core CPI, and this is the number that the Fed will look at and gauge where true inflation is located at. The other ones obviously were up due to the 0.3%. Food and energy were up. So we had last month, or November rather, we had 0.2%, and the forecast is supposed to be about the same, and it came in slightly under. So kind of within the range of forecast, but again, this is still a concern. We're still extremely low in terms of where our inflationary number is. The Fed like it to be closer to 2%, whereas we're closer to 1%, and that's a concern, and they're keeping an eye on inflationary numbers. But with this economy heating up, it is possible that we could see that rise up a little bit. Inflation can be a good thing for as long as it's contained, because everybody likes to see they're making more money and making a little bit more money and stuff. So in terms of also the costs go up a little bit. So that's why it's also good. But if it goes backwards, the people are making less money, even though the things are going down in price as well. So that's why it's within a certain range of 2.5%. The Fed likes to keep it in that range. It's modest and at a steady pace, healthy pace. We also got the home builders index. This is the home builders confidence level where they believe housing is going to be at. So we had a 58 back in December. The forecast is supposed to go up a little bit to 59, and it dropped down to 56. Now, we did have a slowdown a bit in the housing market. Some of it's due to interest rates, climbing up, homes rose. So this is going to be an interesting topic to kind of keep an eye on, to see how they project where housing is going to go. We still have low inventories in many locations. But there are fewer people making offers, but we could bring back a lot of those people, as a lot of those people got kind of disgusted last year with the amount of people making offers, and some of those people fell on the wayside. But also another item to note is the QM rules kicking in January, making financing more difficult to attain for home buying. So that's something that's also weighing on the home builders' minds. Last but not least, we got the Philly Fed, which is the manufacturing in the Philadelphia region for the month of January. So we had a 6.4 back in December. The forecast is supposed to go up to 8.9, and it came up a little bit higher. So yesterday we had New York, which jumped up much higher than it was, and Philly Fed again jumped up higher than even what the forecast was. So good news in the manufacturing in the Northeast region. We're going to jump over to the headline news, and currently the stock market's down for the most part. Dow's taking the biggest beating, whereas Nasdaq and S&P are down a little bit, but a little bit lighter trading. And a lot of it has to do with not so much what we got reported for headline news, but the more corporate stuff that came out. Best Buy disappointed, Citibank disappointed. News about Yahoo firing their COO, stuff like that, where it's kind of was controlling more of the markets at this present time right now. But also there were some comments that Bernanke made defending his position on how they treated the crisis. There was also comment by the Fed president, Williams, out of San Francisco, thinking that this is, with all these asset purchases, there are a lot of risks involved with this that we don't even fully understand, and some of the systems that they have in place may be too simplified to really understand the complex issues that may be underneath it. So there's some so these are some things that were mentioned out there that could create some uneasiness in the market, or at least kind of weigh on a lot of investors' minds as well. Let's take a look at the bond market, and the bond market's actually up today. After kind of a little bit of a beating yesterday, we were down quite a bit, and we pulled back, so we did close that gap we had yesterday, and today we had a nice level upwards. So we're up above the ceiling, and if we can close above that, we might have another little run upwards again. So again, showing some improvement. We're up about 38 basis points, so that's about 35 basis points, or 0.35% improvement in the interest rates, or pricing for that interest rate. So, all right, folks. Good news today. We'll see what tomorrow brings. Today's were more of an impactful news, but tomorrow we do got consumer sentiment will be one of the bigger news tomorrow. Thanks for watching. I hope you guys have a wonderful day, and we'll see you guys tomorrow.